In this analysis of investing in the real estate market in Texas in 2025, first we will look at the macroeconomic context, considering national economic indicators. First, we will look at interest rates. The Federal Reserve's decisions on interest rates in 2025 will heavily influence mortgage affordability. As of now, the rates are forecasted to remain between 6% and 7%. Higher rates mean higher borrowing costs, but they would stabilize property prices. Inflation trends. Inflation affects property appreciation. Stable inflation, 2 to 3%, is favorable for real estate investment. GDP growth. A strong national GDP supports income growth and job creation, boosting real estate demand. The Texas-specific economy will now be considered. First, we'll look at the job market growth. Texas is a leader in tech, healthcare, energy, and manufacturing. Cities like Austin, which specialize in tech, and Houston, which specialize in energy, are economic powerhouses. Population influx. Texas is projected to maintain strong population growth due to affordability and a favorable tax environment. Cost of living. Texas remains competitive, drawing both businesses and individuals, which supports housing demand. Next, we will look at the key markets in Texas. Austin, known for tech jobs and a younger demographic. Austin's home prices are among the highest in Texas. Dallas-Fort Worth. Diverse industries and robust housing demand. Rental markets are strong due to corporate relocations. Houston, energy-driven economy with relatively affordable housing compared to other metro areas. San Antonio offers affordability and steady growth, appealing to families and retirees. Market trends. Median home prices rising steadily over the past decade, but 2025 is expected to see moderate growth due to higher interest rates. Rental market, strong demand for multifamily units and single-family rentals due to population growth. Construction activity. New developments may slightly ease housing supply constraints in major cities. Now we'll look at tax implications. The advantages are no state income tax. Texas doesn't tax individual income, increasing investor returns. Depreciation. Federal tax laws allow property depreciation, reducing taxable income. The challenges. Property taxes. Texas has higher property taxes, 2 to 2.5%, impacting cash flow. Risks and challenges. Economic risks include interest rate sensitivity. Higher rates can reduce home buyer affordability and housing demand. Economic dependency. Cities like Houston are tied to volatile oil and gas markets. Climate and natural risks. Hurricanes and flooding. Houston and Gulf Coast areas are prone to these risks, leading to higher insurance premiums. Property insurance costs. Rising costs due to climate risks can reduce profitability. Next, we'll look at the financial scenarios. The best case scenario is interest rates stabilize around 5 to 6%. Strong population growth maintains demand for both buying and selling and renting. Housing prices appreciate at 5 to 7% annually. The worst case scenario is interest rates exceed 7%, reducing housing affordability. Population growth slows and rental demand weakens. Natural disasters increase property insurance premiums significantly. A neutral scenario would be moderate interest rates, 6.5%, with balanced supply and demand keeping prices stable. Population growth supports steady rental income. Next, we'll look at the financial analysis of key Texas cities based on projected property prices, rental income, taxes, and other costs. Recommendations. When to invest. Consider investing in Q2 or Q3 of 2025 if interest rates stabilize and housing demand remains strong. Where to invest? Number 1, San Antonio. high ROI, and affordability make it an excellent choice for new investors. 2. Dallas, strong job market and rental yields. 3. Houston, affordable entry points, but watch for climate risks. 4. Austin, great for long-term appreciation, but offers lower immediate returns. The investment type could be multifamily units. High rental demand makes them lucrative. And single-family rentals, growing demand among migrating families. The next steps for an investor is to perform due diligence by visiting neighborhoods and analyzing individual properties. Secure pre-approval for financing to lock in affordable interest rates. Use property management services to maximize rental income.